Let us now come to disclosure paragraph. Disclosure paragraph says, first you identify whether the relationship is as a result of control. Relationship is as a result of control means either you are controlling the other entity or you are being controlled by a person or an entity. For example, subsidiary company is controlled by parent. Parent controls subsidiary. Then there are individuals or their close family member. They may control an entity. So wherever the control relationship is there, someone else is controlling you or you are controlling the other. The question in the other batch they have asked me that what about joint control? Is control and joint control same thing? No. So we will interpret only control as per IFRS 10. Control relationship as per IFRS 10, because this word joint control also uses the word control. So there can be some doubt here. So we will interpret control means IFRS 10 definition of control. If that exists, then the disclosure is must, irrespective of the fact whether there have been transaction during the reporting period. So because control is very important, that influences your business even if there is no transaction. The one who controls you without any transaction also can put lot of impact on you. So the standard setter says give the name of that party, nature of related party relationship, even if there is no transaction. Disclosure requirement for other related party relationship will come only when there are transactions in the related party relationship. No transaction, bye. This standard is not applicable. Unnecessary if you give disclosure for just namesake, name of all associate, name of all other entities where person in 9A, 9A1 have control, joint control, significant influence, name of all KMP, their close family member, does not make any sense unless there is a transaction. Okay. Otherwise, in addition to one annual report, you have to also give one directory which will contain the name of all the related parties, which can run into 1,000, 2,000 and 10,000 also. So disclosure requirements, we have already discussed. If neither the entity's parent nor the ultimate controlling party produces financial statement available for public use, the name of the next most senior parent that does so shall also be disclosed. Now what do you mean by next most senior parent? This is the first parent in the group above the immediate parent that produces CFS available for public use. Okay, now you see A Limited has a subsidiary B, B has a subsidiary C, C has a subsidiary D, D has a subsidiary E. In our example, E is the reporting entity, RE. E is reporting entity. So there is standard says, if suppose D is the immediate parent of E, A is the ultimate parent of this entire group. If neither the entity's parent means D nor the ultimate controlling party, that is A, produces financial statement available for public use, then the name of the next most senior parent that does so shall be disclosed. Now who are the next senior parent? C and D. So first we will check now whether C produces the financial statement for public use? If yes, disclose the name of C. If no, then disclose the name of B if B produces financial statement for public use. If there have been transaction between related parties, then an entity will disclose the nature of the related party relationship as well as information about the transactions. An outstanding balance necessary for an understanding of the potential effect of the relationship on the financial statement. So what the standard says, if there are transactions, these are the disclosure, nature of related party relationship. So then you have to write how the two entities are related. So you will say subsidiary, associate, joint venture, person who in which KMP has a controlling stake, person in which the controlling shareholder has a significant influence. So under paragraph 9A and 9A and 9B, yes or no? You have to connect them. Then information about transaction means sale, purchase, loan, interest, dividend, payment for any service will be disclosed. And this is also very important, outstanding balance. Outstanding balance means how much is due from related parties. Many times companies do not take efforts to recover money from related parties. And after some years they will write it off also. Who will suffer the loss? The shareholders will suffer the loss. That is indirectly a way to siphon off the funds to other group entities. Many Indian companies say that we are loss making companies. Actually they are not. The money they raise money from shareholder, they raise money from bankers, and through their related parties those money are taken out. Okay, and in their books they will show losses, but that money gets transferred to so many other layers and layers of related parties. So when you give the outstanding balance from related parties, it will attract the attention of the users of financial statement, and they will pressurize the management to take efforts to recover that money. Okay, if you go to a bank, the bank will ask you, when so much money is due from related party, why have you come to us for taking loan? You should recover it from related party only, right? So in the annual general meeting, the shareholders, they put a lot of pressure on the management that you have to make this balance zero or as per the normal credit terms only. So that is the logic of this disclosure. Then the standard says at a minimum disclosure shall include name of party, nature of relationship, transaction. Then you have to also give volume of transaction, means the amount. You will not write 7 kg have been sold, you have to write value in rupees or respective currency. Then amount of outstanding balance we have discussed with details of security and guarantee. Provision for doubtful debts relating to outstanding balance. So that is called allowance for bad debts that you will disclose. Amount which may become bad in future. Amount written back or written off, disclose. Now these are very dangerous item to disclose with respect to related parties. First you sell them, that you disclose here. After 3 years, write off. So what is happening? Your money has got shifted from one entity to another entity. And disclosures will be separately made for each category of related parties specified in the standard. So some of the categories of related parties are parent, entities with joint control, significant influence, subsidiary, associate, joint venture, KMP, and other related parties. Okay. Now, before we come to this paragraph, we'll first understand disclosure requirement fully. One question is important, but wait. In case if you have made payment to KMP, then the breakup of that compensation will be given. Okay, you have to disclose what is the short-term employee benefits paid to KMP, post-employment benefit, other long-term benefit, termination benefit, any share-based payment like ESOPs. Okay. Now, why this disclosure is required? Why you want to give so much information about the remuneration package of KMP? Let the shareholder also know how much these KMPs are getting. It has been observed in countries like India, the KMP gets a salary of 15 crore rupees and company earns loss of 30 crore rupees, incurs loss. Can you imagine this KMP is walking away with 15 crore rupees pay packet and I am the shareholder of that company. I have put my 1000 crore rupees of capital and I get nothing. So this will actually again put pressure on the KMPs. You have to perform. Okay. Otherwise, the shareholders will raise question mark on such high salary pay package. Then if an entity obtains KMP services from another entity, that is called the management entity, the entity is not required to give disclosure relating to compensation paid or payable by the management entity to the management entity's employees or director. So that is a small benefit to the company. So A Limited takes managerial key management services which we discussed earlier, KMP services from B. Now B may have some directors, some MDs, some CEO. Is A Limited, the reporting entity, required to give the pay package of this executive and employees of the management consultancy service? Management companies which provides management services? No. That much is relaxed. Now examples of transactions. This list is not exhaustive, huh? These are the examples of transactions that are disclosed if they are with the related party. Purchase of goods, sale of goods, purchase and sale of property and other asset, rendering or receiving of services, leases, transfer of research and development, transfer under license agreement, finance agreement, amounts incurred by the entity for the provision of key managerial personnel services that are provided by a separate management entity will also be disclosed separately. Is it right? In case if you hire the services of a company which provides KMP services, then payment made to that entity will also come under disclosure. But payment made by this other entity to their directors or employees will not come under disclosure requirement. One more relaxation is given to you. Similar items can be grouped together. Similar items can be grouped together unless separate disclosure is necessary for an understanding of the effect of transaction on the financial statement of the entity. Suppose parent company and subsidiary company, they continuously parent sells goods to subsidiary. So will this disclosure be appropriate? Tell me. Invoice number 102, amount 3700, invoice number 105, 3500, invoice number 107, 1900. And what you do, you give 5 pages disclosure about 250 transactions that took place during the year. Should we? What will you do? total. So all sale transaction of similar type means, suppose this is sale of inventory, okay, then you can group together. Then suppose there is a sale of some other asset like machine, fixed asset, you might have transferred it to subsidiary for a consideration. Sale of machine separately. Suppose you have purchased from subsidiary something separately, so those can't be mixed. Now within this also, tell me now, these three items are at normal market price. These five items are 10% below market price. Do I need to show separately or can I mix them? Now this time you have to, even though both are sale of inventory, but separate disclosure is necessary for understanding of the effect of transaction. Is it right? So many times it may so happen that subsidiary company gets 20% additional discount. Disclose it. There is no harm in disclosure. Let the user understand that this transaction is at a discounted price. Then the company will have to justify to the shareholder why it was like that. Government related entities. The standard has got some soft corner for government, okay, and government related entities. So they are given some relaxation from disclosure requirement. So the above disclosures means the entire paragraph number 7 that we have discussed, 6 and 7, are optional for transaction with government that has control, joint control or significant influence over the entity. Government will include central government, state governments and local government also, who have control, joint control or significant influence over the entity. And another entity in which the same government has control, joint control or significant influence over that entity. So what does this mean? Let us say, suppose there is a central government. Central government. It has control over A and it has control over B. Now the question in the exam will be, explain the exemption from disclosure requirement for entity A. So you will say entity A need not disclose transaction with central government under this clause. Government that controls. Entity need not disclose transaction with B also if it is controlled by, jointly controlled by or have significant influence by the same central government, by the same government. So same government controls B also. So entity A need not disclose transaction with central government and need not give disclosure requirement relating to B also. Same applies for B also. But what if entity A has a KMP and they have paid remuneration to KMP? Will the entity A be exempted from disclosure requirement of KMP remuneration? No. It is not a transaction with central government. It is not a transaction with other entities controlled by the same government. So the transaction other than these two will be disclosed. Some students interpret this like the standard is not applicable to government company. Did I say like that? It is not applicable for transaction with government who controls, jointly control or have significant influence over you, or those other entities over which the same government who controls you control, jointly control or significant influence. Now in case if you decide to exercise the option, what is the option? Need not disclose. If you want to disclose, you are welcome. The standard but gives you an option. So if you want to exercise the option of not disclosing, then following disclosure will be made. So some minimum disclosure you have to make. For example, name of the government and nature of relationship, right? Then name and amount of each individually significant transaction. Nature and amount of each individually significant transaction. Then it is better you don't take the option only. Because if you are exempt here, then why they are asking you to disclose here? But here you can disclose only some significant transaction. If you go under this, if you don't take the option, all transaction will have to be disclosed. Or other significant transaction. Or for other significant transaction, a quantitative or a qualitative indication of the extent of the transaction. These are all subjective statements. Qualitative and quantitative indication of the extent of the transaction. Why government is given so much favoritism with the government? Because governments play an important role in accounting standard setting. Okay. And they want to protect themselves. As it is, opposition parties are behind the life of government. And if they start disclosing it, then they will come into more trouble. So that is why. That is what I believe. Now next is one question is pending on government. Yes. This is one question printed. Number 10. Question number 10. Government G directly controls entity 1 and 2. So the diagram, keep looking at the diagram below. In the exam also for this chapter, if you can draw a diagram, this will really give you the answer instantaneously. So first you draw the diagram. Government G directly controls entity 1 and entity 2. Then it says it indirectly controls entity A and entity B through entity 1. Means under entity 1 you have entity A and entity B, which are controlled through entity 1 only, and entity C and D through entity D. Person X is a member of KMP of entity 1. Entity 1 has a KMP. Required. Examine the entity to whom the exemption for disclosure to be given and for transaction with whom. Okay. Question has a wrong drafting. Examine written from the point of view of entity A. Examine from the point of view of entity A. Examine from the point of view of entity A the exemption for disclosure to be given and for transaction with whom. So from entity A's point of view, you have to answer. Is it required to disclose transaction with the government? No. Other entities which are under the same control of the same government? No. So entity A need not disclose transaction with either entity 1 or 2 or B or C or D. Okay. However, he is the KMP of the parent of entity A. KMP entity 1 is the parent of entity A. So KMP of parent entity is a related party. So X is not exempt. X will be disclosed. Right. So see the answer. For entity A's financial statement, the exemption of IAS 24 applies to because the question they have asked from entity A's point of view, it can be applicable for any other entity also. Transaction with government, transaction with 1 and 2, transaction with BCD. However, that exemption does not apply to transaction with person X. Same answer you will write for B also. What about entity C? Entity C, Mr. X is not related to entity C only. So since Mr. X is not related to entity C, the transaction need not be disclosed. Same thing for D also. Right. This standard is almost over now. Now you note down some homework. Solve question number 8, 9, 11, 12, 13, 14, 15, 16, 17 as homework. Straightforward question, answer also I have given in detail. But check the answer independently. You need not assume that the answer is 100% correct. You need to apply your own thought process based on our discussion and come to a conclusion. So this chapter is over.